Hello my friends and welcome to this new episode. In the previous episode you learned about the psychology of market cycle. Then you learned about TradingView, how to open it. Then you learned about the localization, which is our first pillar of our technical analysis. And now you're going to learn about the second pillar of the technical analysis, which is about structures. So basically structures will tell you when to buy and when to sell. Because what I'm talking about, those structures are of only two types. It's either W's, when you have ascending bottoms, or M-tops when you have descending tops, okay? So I'm going to show you an example on my screen of some W's that happened in the past, which were followed by a very strong increase, by a very, very strong increase, therefore a good time to buy. All right, so let's have a look at the Bitcoin in October 2020. So this is the Bitcoin in October 2020. I'm going to zoom even more. And here we clearly see some W's. So what I mean by W is some ascending bottoms. So here, this is the first part of the W. This is the first bottom, this one right here. I'm looking at it in the daily time frame. Then this is the second part of the W with the top in the middle of the W. Then the second bottom, exactly here, which is higher than the first bottom, and then the last part of the W. And then we have a new W getting drawn. This is the first part of the new W with the first bottom, then the second part with the top in the middle of the W, then the third part with the second higher than the first of the W, and then the last part of the W. So we have two clear W's in a row, just like that. And what happens when we have W's? Usually when we observe some W's in the structure of the Bitcoin price, when that's usually the Bitcoin price is going to go up strongly. Why? Because when we see W's, that means that the smart money or some big financial institutions or the whales are defending this zone. It draws W's because they want to defend the price of Bitcoin, meaning they don't want it to go back down. So they continue to buy, they continue to accumulate so that the Bitcoin price doesn't go down and it actually goes up. And so when we see those W's, that usually means that a steady and long increase will happen next. Now you need to know something very important. You need to know that the larger is your time frame, the most powerful is the W. Meaning the larger is your time frame, then the higher probability a W will be followed by an increase. In other words, if you see some weekly W's, then you have a high chance, a high probability that the Bitcoin price is going to do some upward trend for a long time, for at least a couple weekly candles. And on the other hand, if you have some hourly W's, this is not powerful enough. Daily W's is good, weekly W's is incredibly good, and monthly W's is the best. If you see some monthly W's, it means some really good indication of an uptrend and possibly a bull cycle. So that's for the W's. Now let me show you the opposite structure, which usually tells us to sell. That's usually a sell signal, and which you will of course find at the top, when reaching the euphoria phase. And that's actually a good indicator to understand that we are past the euphoria phase. So I'm going to zoom out. And you're going to clearly see the M-tops. Let's take this cycle, for example, this one. And you're going to clearly see the M-tops here, because indeed, that's the top of the cycle. So what happens? Well, now I'm talking about the M-tops. So it's when the Bitcoin price is drawing some M's, like the letter M, but meaning that we have some descending tops. So this is the first part of the M, right here, with the first top of the M. Then this is the second part of the M. Then this is the third part of the M with the lower second top inside the M. And what happens? Well, that's when the M is validated right here. That's when we go below the middle of the M, and usually this is followed indeed by a strong fall. So whenever you see some M's at the top, this is really a bad sign, especially if you see them in the weekly time frame. I'm going to show you. We can also clearly see them at the top of the cycle. Let's check it out. So that was the first cycle where we clearly see the M's, right? This is the first part, second part, third part, and the M is validated here. You know, the M is validated when we go below the middle wick inside the M. And so then we went down, then we had the depression phase, and then new cycle, up, hype, thrill, euphoria, and then in the weekly candle we can clearly see some M's. So this is the first part of the M with the top of the cycle. Then we go back down. This is the bottom in the middle of the M. Then we go back up, but as you can see, the second top inside the M is lower, much lower than the first top inside the M. And then once we go below the middle of the M, that's when the M is validated, and that's when we have a big fall. So you see, the M structure indicates a big fall, and that means that it's really time to sell if you haven't done it already. If you haven't recognized the euphoria period, then you have to absolutely sell as soon as you see the M validated. Okay? And same for the W's. W's are validated when the last part of the W, the last branch, is going above the top wick in the middle of the W. Okay? I can show you. Actually, let me show you a W that we have in the previous cycle. Yeah, okay, so perfect. Let's have a look at this W. So this was the capitulation in the previous cycle, right? We went down. So that's the first part of the W with the first bottom of the W. Then the top wick in the middle of the W. Then the third branch in the W. This is the second bottom of the W, which is indeed higher than the first bottom of the W. And then the W is validated when we go over this wick here. So it is validated right here. And what happened after it was validated? Well, of course, we went super high for some weeks, right? And then the thrill phase happened, the euphoria phase happened, the smart money sold here, retail investors bought here, and so then it fell again. So you see W's, especially in the weekly time frame, but also in the daily time frame, and M's, same in the same time frames, are extremely powerful to tell whether we're going to have some upward trend or downward trend. When you see some weekly W's, it's usually followed by an upward trend, and when you see some M-tops, it's usually followed by a downward trend. All right, so observe this with TradingView. I want you to get familiar with this, and I want you to use this for your technical analysis. Now, it is done for this episode, and in the next episode, we'll see the third pillar of technical analysis, which is the momentum.